Hello and welcome back to the channel. Thanks for tuning back in. It's me, Rob Marsiglio, back with another video this week. I want to cover the big OSFI announcement from yesterday, that being September 25th, having to do with removing the stress test. Then near the end of the video, I'm also going to get you caught up on what is going on through 3 full weeks of September, comparing it to the last 15 or so years, then looking at daily sales activity. How are sales trending in the 416 versus the 905 and the condo versus freehold markets, just to see where things have really started moving the most, if anywhere, through 3 full weeks of September. As promised, here's what the first part of the video is going to focus on. It's this article from Canadian Mortgage Trends that outlines the big OSFI changes. OSFI to eliminate stress test for uninsured mortgage switches starting November 21st. OSFI has confirmed that it will remove the requirement for lenders to apply the minimum qualifying rate, or the MQR, to straight switches of uninsured mortgages. So the actual announcement is a little bit more conservative than what my thumbnail led on. The stress test is not being dropped altogether, just in the instance where uninsured mortgage borrowers are switching lenders at renewal. Let's dive a little bit more into this article for a bit more of an explanation. Superintendent Peter Rutledge confirmed that OSFI will formally announce this change on November 21st, 2024 as part of the regulator's quarterly release pilot, and the change will come into effect that same day. This change will make it easier for borrowers to switch lenders at renewal without having to prove they can afford their mortgage at a higher rate. The stress test was introduced in January of 2018 by OSFI, and it required borrowers to qualify for a mortgage rate of a minimum of 4.79%, or whatever the given rate that they are receiving, plus 2%. And it was to make sure that they could afford payments if rates started to go up. In spring of 2021, that minimum qualifying rate of 4.79% was raised up to 5.25%. So if you have tried to qualify for a mortgage from May of 2021 or so up until now, you have had to qualify at a minimum of 5.25%, or the posted rate plus 2%. And given what we've seen with rates and the massive rate hiking cycle that we just went through from early 2022 up until really mid 2024, when we've seen our first few rate cuts in a row, this has been a great policy, and hypothetically should have helped a lot of people ensure that they could keep up with payments as rates have started to go up. But as we've already touched on, this change will only apply specifically to straight switches of uninsured mortgages, and borrowers moving to a new lender must maintain the same loan amount and amortization schedule. So if you are applying for a new mortgage, you will still be required to go through this stress test even after these changes come into effect November 21st, 2024. Now, why has OSFI decided to make the change now? The policy shift marks a departure from OSFI's stance earlier this year. As recently as June, the regulator had doubled down on maintaining the stress test for uninsured mortgage switches, citing the need for sound risk management. However, OSFI told Canadian Mortgage Trends there are 2 key reasons behind its reversal. First, we're listening to what we have heard from industry and from Canadians about the imbalance between insured and uninsured mortgagors at the time of mortgage renewal, a spokesperson said. And second, when we look at the data over time, we've observed that the prudential risk that this was intended to address have not significantly materialized, they added. As a prudential regulator, we enable banks and lenders to compete and take reasonable risks. So I think those risks definitely materialized over the last couple of years in this massive rate hiking cycle. But what it seems to me that they're saying now is that they're not seeing too much risk of massive rate hikes in the future. That's not a guarantee that that won't happen for some reason or another, but their base case appears to be a falling rate environment for at least the next little bit of time. It's not to say they can't backtrack on this regulation the next time they review, or in a year's time if they revisit this policy, they could reenact this mortgage switch or lender switch at renewal rule. It's just saying that for now, for the next little bit of time. I think they're anticipating falling rates. So if you've already proven that you can qualify at the posted rate plus 2% or at that minimum qualifying rate, why put a borrower through that stress test again? You still do need to qualify for a mortgage if you are renewing with a new lender. Obviously, if you've lost a job or if your income has taken a massive hit in the last few years, you may still have a tough time qualifying, but you will not have the stress test as an added hurdle on top of that qualification. Now, I am just a realtor speaking about this. Let's see what some mortgage professionals had to say about this change. For the second week in a row, we have a Ron Butler quote appearing in the video. He says, "This is all about fairness to borrowers. It never made any sense to apply a stress test on renewal, noting that the current lender wouldn't even typically check if the borrower is still employed at the time of renewal. New lenders, however, fully underwrite switch mortgages, making the stress test redundant in these cases." He wraps up by saying this makes a better rate at renewal more possible. So improved, or a chance at improved affordability for the borrower at renewal is not a bad thing. Lauren Vandenberg, CEO and president of Mortgage Professionals Canada, agreed, emphasizing how important this policy change is for homeowners, calling it a significant win for Canadians. This change ensures that homeowners can secure the best rate that fits their financial needs without unnecessary barriers, giving them greater choice and flexibility, she said. It also encourages healthy competition among lenders, leading to better options for borrowers. So from where I sit, and I think it's pretty obvious, the people that this rule change does help is current borrowers with uninsured mortgages that are coming up for renewal. I think it could put a bit of a clamp on maybe some potential new inventory that was having to come to market. Let's say somebody wasn't happy with the rate they were getting from their current lender. It wasn't really an option to go switch and shop around. And if you were just switching into a higher rate or couldn't afford the rate you were being offered, that may have triggered a forced sale in some instances. I think we might see those forced sales come down a tick based on this rule change. I don't really have a great grasp as to just how much this will reduce the kind of uptick in forced sales. But I want to hear from you and what you think in the comments. How big of an impact will this change have on current borrowers? Will it kind of suppress maybe power of sales or force sales at the time of renewal from current homeowners? Let me know what you think in the comments below. That is all the mortgage talk that I can stomach for one video. So let's hop into some stats and get a little update as to what has happened this past week in the Greater Toronto Area real estate market. And we'll do that by looking at our new listings entered first off through 21 days in September per Toronto MLS. Again, the reason that I am choosing 21 days is we are going to make sure that we have an even amount of weekend days and weekdays. If we did, I'm recording this on the 26th, so through 25 full days, these numbers would be a little wonky because you'd have more weekends in some years than other years. And what you can see is that, again, the freehold market, one of the busiest starts to a September. Still 2008 is the busiest new listing month on the freehold side that we have seen. Going back to 2008, we can see that 2024 slots in nicely right behind 2017, 2018, and 2020. On the condo side, bit of a different story. It's no longer the busiest start to a month listings wise. 2020 saw more new condo listings hit the market than we saw in 2024 through 21 days, but still a significant uptick from what the average would be, hovering right around that high 3,000s numbers where you'd normally expect to be through 3 full weeks of September. On the sale side, still not much signs of life, although again, it is no longer the slowest from a sales volume perspective on the condo side. You can see we had 5 more sales reported through 21 days in September in 2024 than we saw back in 2023. The rate of sales on the freehold side is actually upticking a little bit more than what we saw back in 2023. About 150 more sales reported to date than we saw last year at the same time. It is important to bring context to these numbers and really compare sales to those new listings to get an idea as to how well the market is moving. And by these metrics, you can see that our SNLR, or our sales as a percentage of new listings, is down in that 25, 26%, or 22% on the condo side, firmly in technical buyer's market territory. But as I've been having these discussions with colleagues and clients, this is not meaning you're getting a great deal. And I've said this on the channel before. It's not a guarantee you're going to go out and lowball a seller into selling their home to you. This number is, it's a lot of stubbornness entrenched in this number. Even just this past week, coming across a few listings that we've wanted to offer on, maybe offer what we think is market value for that home, but it's a seller who's in a situation where they don't really need to sell. They can kind of wait to see what the spring market is going to bring them. They're just in a position where it's not stress selling from a large chunk of the market right now. If you want to get a good deal, it's trying to target those maybe stressed out sellers a little bit more at this point in time. 3 more quick charts to wrap up, starting with our 7-day moving average of reported sales. So we're focusing on the sales numbers right here. You can see that's the freehold market that has bounced back. It fell off a little bit more from July into August, at least the 7-day rate of sales. You can see that in September, we've come back up to numbers that we were seeing back in July. Still nowhere near what we saw for our rate of sales going back through even end of February and through the beginning of July. So I'm expecting September at this point in time to still slot in somewhere behind those busiest months of the year. Will we reach the February 2024 levels? Still to be determined. On the condo side, however, I think it's a bit more of a slam dunk that we will not see even the sales levels that we saw back in February of this year. It has bounced back from this drop off that we saw, but we're still looking at around the same rate of sales that we saw at the beginning of August. It was a bit of a slower build-up through September than we saw in August, I'd say. So we'll have to see where those condo numbers slot in. When we break it down from the 905 and the 416, it's almost the inverse. Like, we're seeing more sales in the 905, which isn't a surprise. There's a lot more real estate in the 905 than there is in the 416. But the jump from the rate that we were seeing at the peak in August to now is a lot smaller in the 905 than it was in the 416. And this wouldn't be a perfect overlay, but when we look at the Toronto freehold market specifically, this red line, you can see that that has had the most significant uptick in sales activity through September so far. This is now looking at the 30-day rate of sales. And really, I'd argue this is the only market that we've seen a significant or even noticeable uptick in sales activity through September so far. So using this information, if you are a home buyer looking for a freehold property in Toronto that's looking to be the most competitive market right now at this point of the year, everywhere else really hasn't bounced back too much after the big fall off that we saw in the summertime. Like, nowhere is near the 30-day rate of sales that we saw earlier this year, but it's really only the city of Toronto's freehold market that is experiencing a little bit of a bounce in sales activity. Everywhere else is pretty flat. All right, I hope you got some value out of this video. Again, recapping the OSFI mortgage stress test changes on renewal, as well as just a bit of an update as to where the market sits through 3 full weeks of September, comparing it to 2008, as well as just looking at the trends, the 7-day trends and the 30-day trends, as to what sales activity is doing right now. If you have questions about anything I covered in the video, there's always a Calendly link in the description of the video to book a call with me. And if you enjoyed the dive into the numbers or into the content off the top, I'd appreciate you subscribing to the channel, liking the video, sharing it with a friend who would get some good value out of this info, or even maybe just find it entertaining. Thanks so much for sticking with me right through to the end of another video. Till we speak again next time, please stay safe and cheers.